I go outside. I think it's
Hi, Arthur.
Hi, can you hear me?
We can.
Great. Oh,
I'll look for Jan to join as well.
Yes, I see we are live now. Somewhere press a live, so we are on.
Awesome. Welcome. We still have one person that we're waiting for. Is Jan almost here? Do you know? Heine? Otherwise, let's already kick off. I'm happy to see you guys again. Everyone had an okay week. I see sunshine everywhere at least.
Yes.
I got massively sunburned, so that was good.
Well done. As a true Dutchman, with the first rays of sun, you need to get sunburned. Isn't it as red as a tomato, as brown as a chocolate the next day, is the saying? And I think, yeah, fair enough. At least, hi everyone. Hey, Jan.
Hi.
Welcome. How are you?
Finally made it.
It's welcome to the webinar, guys, and everyone watching as well. I'd say let's kick off, right? Cool. So it's basically it's Key Search's first webinar that we're doing, and we decided to focus on a topic. Well, obviously, otherwise you wouldn't be here. We focus on a topic of the global funding pullback within VCs and its effect on hiring, because I think it's there's a lot of things that have happened in the last, let's say, 12 months. We've seen big tech firms reducing their headcount quite a lot. We've seen smaller firms either still hiring or not. We've seen the VC funding in the last 2 years, last 3 years, go up massively and then now reduce quite massively as well. But digging a little bit into the numbers and speaking with a lot of people may provide us some insights that would actually be helpful. This is a topic for us that we can't obviously discuss on our own. So that's obviously why we've brought you as speakers as well. I'll introduce you in a couple of minutes. Well, I'd love to ask you to introduce yourself as well. Maybe to give an additional background to sort of the goal on what we want to achieve during this meeting is, well, basically if we take a look at what has happened across the reduction in hiring, increase in hiring, whatever we will discuss in that regards, is that there are many companies that are either struggling with this topic, they don't necessarily know what they want to do, well, from a hiring perspective, from an investment perspective, and we're hoping to give them some handhelds and some potential insights that could actually help them. Maybe a quick intro towards us. I'm Delano. I work at Key Search, and Key Search is an executive search firm where we help founders of companies basically find the best leaders that will be able to help them cultivate their dreams. This is either from a private equity or a VC perspective where we're introduced directly to the founders, where we take a look at various stages of those companies and helping them find the leaders that will be able to grow the company as such. It also gives us quite a unique insight because we speak with so many thousands of people across the year that are leaders in these organizations, and we have an insight into their kitchens, which I think you, from your individual perspective, have as well. And there was quite a dominant topic is that we don't really know what's going on. We don't know if you want to hire now. We don't know if funding is going to come in. We don't know. And we thought, well, if we don't know, maybe other people don't know as well. And that's why you are here. So our speakers today is Ildiko Sirman, is the head of HR at Maximon, it's a longevity company builder. Arthur Nobel, operating partner at Knight Capital. Jan Hauke Holste is director of people and proxy holder at Flex Capital. And Dr. Luisa Müller-Wittmann, CEO and co-founder at Checkturio. Before we begin, this is a very brief introduction. Maybe you guys want to give a quick intro towards yourselves as well. Ildiko, maybe if you want to start.
Yes, so hello everyone, my name is Ildiko, and as Delano mentioned, head of people at Maximon. At Maximon, we are building up longevity startups. And from my background, I have been working the last 16 years always for technology and startup companies. So I enjoy mainly this phase of building up something from the scratch. So the 0 till 50, that's kind of which I find the most exciting one. And yeah, I'm very happy today to provide some insights.
Thanks. Luisa?
Yes, hello, my name is Luisa. I'm the CEO and co-founder of Checkturio. We want to bring efficiency in fleet management for commercial vehicles, supported by artificial intelligence. And yes, we are right now in the seed phase, and we got this topic. It's very interesting and important for us. That's why I'm here today. Thank you very much for inviting me. And just to say, I'm right now on holiday, but this is very interesting and very important for us. That's why I'm here still. So no wandering around in my background.
Clear. Thank you. And thank you for taking the time during the holiday as well. Jan, if you want to take over.
Sure, thanks. So my name is Jan Holste. I work as the director of people here at Flex Capital. What do we do? I'm maybe the odd person here because we don't do venture capital, we do private equity. But while a lot of companies are struggling to grow, there is a clear bridge from the VC world to the PE world, and the magic word is profitability. And to position myself directly as a people director, I would always say business first, people second.
People,
To
wow.
encourage healthy
That's
discussion.
a good intro. Thank you. Arthur.
Great. Thanks for hosting me. Really looking forward to today's conversation. Hope it can be helpful for the audience. Myself, I'm Arthur from the Netherlands, as you probably heard from the accent. I'm working at Knight Capital. We're a B2B software investor. I would say operating between the VC and PE industry. So primarily helping companies between 1.5 and 5 million in ARR, the scale up, who are, I would say, operating in niches and are quite capital efficient. So that is where we play, and I'm really looking forward to support today.
Sure. Thanks everyone for the quick intro. And maybe to give sort of a description of what we do first is what is actually happening, right? Because I think most of us feel like something is happening, but it is good to set sort of the stage. I think most of us have realized getting funding is potentially harder, that there is most likely a difference between PE and VC in terms of where the market is heading towards as well. But I'd love to get maybe a first sense, or one or two people that give their opinion on the pullback as such. Maybe Jan, if you can start first. What do you think has happened in the last 12 months?
I mean, what you can see that on a meta level, institutional investors have problems in their portfolios. So they basically need to rebalance their portfolio, which means if your stock portfolio goes down, your stocks are going down, and your overall share of that portfolio goes down, and you need to reallocate money. And this money cannot go into venture capital and or private equity. So this is a meta level what's going on. And if you drill down, you also have valuations in private equity, but also in venture capital, who people are clinging to. If you build a company and someone told you it's 50 times your EBIT worse, then you cling to that because you built it with your blood, sweat, and tears. And this is a problem. I mean, it's a problem for venture capital funds who also have the bonuses tied to it. It's a problem for private equity funds who cannot buy those companies. And it also trickles down to hiring, because if you are unsure about the continuation of your company in terms of will I sell it, will I get new funding, then you are not hiring in most cases. That is the one side. And the other side I see is that people were incentivized to spend money like crazy. Before I worked in PE, I had a company in which I had 80 to 50 people a month. And the only question from investors was, how fast can you translate literal capital into human capital by talent acquisition? This was the only question they asked for HR. Nothing else matters. And this world is over for the foreseeable future.
Oh, you're saying that's the conclusion as well. The mad hiring spree, as we've seen, is over.
I guess because the macroeconomics are not indicating that money will be so cheap.
It's fair. It's a fair judgment. I think we've seen this very much from an executive search. It didn't matter. I think all of us have seen this, right? Ildiko as well. From a hiring perspective in the last couple of years, was it crazy or?
Yeah, I mean, I think we are at Maximon in a quite unique situation because our startups were, despite the crisis, able to actually grow very fast. So we doubled actually the size of our employees in our portfolio companies. But I think that's a quite unique situation of a company builder, and it's kind of an advantage now also for funders because it's very difficult to get funding. Maybe you get a first funding, but then to follow up rounds are quite difficult. And if you are with a company builder, then of course this is making a bit easier as well, because we also support our startups not just with the seed stage but also then later stage as well. And that's of course it's a bit a different situation when you are looking just the overall market.
Does that make you, beyond this group, then does that make you the odd one out in the market?
What do you mean with that?
As in, are you the only ones that are in this situation where you're still doing quite well, where you're still being able to grow?
I mean, I think there are a lot of companies which are still able to grow. So it's not that we have now a completely, the market is over and there are no deals happening anymore. So I think you can still see also bigger rounds happening, but it definitely much less than in the last couple of years. And it's kind of getting back to a normal or new normal level. We can also say that the last couple of years were maybe also just not healthy anymore. And what I can see that in this kind of environment, you really see that one of the greatest companies were actually built during crisis time. So I think with a great idea, with a great team, you can still make it, but you really need to be a good entrepreneur and you really need to have a very nice idea. And even then, of course, that's not always happening, but not like a market where you don't have anything going on anymore.
Sometimes there is a factor of luck that needs to be considered as well. And Arthur, from your perspective, is there anything specific that you can add as well towards what Ildiko and Jan have just mentioned?
I think what we just see is that we had very low interest rates in the last 12 to 14 years, and probably people have already read this or heard this over and over. But I think just due to that low interest rates, not to go too deep into like how valuations are built, but it was like a big driver for I would say very high valuations. Now that the interest rate got up, that was a big influence in the end of the day on the valuation of the company. So what you see in the public market from I think November 2021 onwards to where we are today, that we went down like 60, 70, 80% in the B2B SaaS public listed companies. So I think what we now have seen, particularly in the last year, that from an investor perspective, that it was very hard to price companies because of the uncertainty with the Fed. Because now we're around like a 5% interest rate, but are we going to 10? Because that means like I'm still paying way too much, or are we going back to 2.5 or 3 or whatever number? And I think that was mainly the story of 2022, where it was very difficult for both parties to price. And what I've also seen with many founders, on the other hand, who felt like, if I don't need to raise money, I'm not going to raise, and that I think led to this situation currently that not a lot of deals have happened, but what I would expect will change in the next 6 months.
Got a follow up on that as well, but Luisa, obviously you mentioned it in the beginning. You're taking a look at this from a slightly different perspective. As your startup founder yourself, how is this for you?
Of course. By the end of the year, you have to raise to survive, because we are in the seed stage, or the pre-seed phase. But I think that the market kind of needed a clearing. In Germany, you said a clearing thunderstorm, because it was too crazy. You have like a seed investor, and 6 months later is a Series A investment, and actually that was not healthy for the market, because it was so too hot to say it. Everything extreme is not good. of course, I would be lucky if I still would this in
Yeah.
this situation. I'm not in this situation right now, but I'm still convinced where we are right now in our phase, because we are in a seed phase and we have traction and we have already customers for our SaaS solution, and we are a great team, my co-founder, and we have like together almost 40 years of experience in the industry, from insurance and from software development, and we have a great team of developers behind us. So I think, of course, it's luck as well, but I think these kind of doesn't change right now for us in this phase. I think it's more difficult for Series A because the KPIs must be more stronger. But in seed, you don't have this kind of high KPIs already, because you have to sell the vision, the team, and the problem you want to solve. Yes. That's my point of right now where I am.
Maybe can I build on that?
Sorry.
So what I see more from this market is that, and I'm totally not recommending founders to sell their stakes at any price. Let that be clear. But I do think that if you have a solid business with good product market fit, you have the right metrics, and you're willing to go for an acceptable price as an investor, you can definitely raise money and keep operating your company. Of course, I understand that from the entrepreneurial perspective that you don't want to give away too much. So I think it's more that the discussion is more about, what is a fair price rather than can we actually raise, because for good deals, investors are still in the market, I believe.
Yes.
But maybe to add to that, then, because you mentioned the right metrics, what are the right deals? What are the right metrics that you watch for now? Maybe Jan, maybe as first. I know it's different
Sure.
from a PE.
For us, it's really important. I mean, we only invest in tech companies, so this is kind of like a hard criteria for us if it's a tech company or not. So if you're doing fast-moving consumer goods and selling, I don't know, water with taste, then we would say that's out. It doesn't matter how the metrics look. But if you are in the tech space, you would basically look first and foremost for profitability. So I would say the big difference between private equity and venture capital is the numbers, focus on numbers. In venture capital, you have a story, you have a product market fit, you have this magical moment, and in private equity, you have numbers, and then you look at the story. So this is a little bit different. And here we are looking for profitability, for growth. Are there growth opportunities? Is the company profitable? And do they have a good margin? And of course, if we see a trajectory for growth, and to basically catch my initial statement of business first, people second, do you need to brute force that growth by adding people, or do you have a product which scales without people? Because this is a fundamental difference in business models. If you have, I don't know, here in Germany, do you want to be Deutsche Telekom, or do you want to be a podcast? Two products which scale highly with people. I mean, telecom sales or a podcast which basically doesn't require any additional people for additional revenue. And those are metrics we look for. And this is why I would also say, if you have a company which is not growing fast enough for new funding in terms of venture capital, cut cost mercilessly and look out for a PE investor.
Sorry, does this sound shocking to anyone? Also, maybe the phrase in company first, people later?
I would quite disagree with the company first and people later. So my experience is actually that you really need to have the great team, and I think it's almost more important even than the product sometimes, because just think about it. If you have maybe the product, you didn't get it right for the first try, you can still do a product next round, a product fit. In most of the cases you can customize it, but customizing your founding team and your co-founders, that's of course a much more difficult task as well. So I think we know that most of the startups are failing, and we also know that a very huge part of them are actually failing because they don't have the right team as well. So of course, you need both of that, but I would always bet more on the team than just on the idea or the product.
On the
Yes,
other
me
side,
too.
you do say something quite similar to Jan when it comes to the founding team in a sense as well. Only the opposite, I think, is what Jan says, is it's much more mature in that regard. When you invest in organizations versus, say, the earlier stage organizations where the founding team is then more important. Because I'm also assuming, Jan, that when you enter an organization, is that you either replace the executive team.
That is highly dependent on the situation. I mean, we don't do distressed assets. So in most cases, we go into companies who are well run, well functioning, and there we help to grow. And growing can be organically and also inorganically. And in some places, that means also we look at functions, and then we, especially for HR or finance, like smaller companies don't have a specific HR function. But if you have 10 million revenue, 4 million of EBIT here, and then you add another one of those, and then you have 100 people, which is kind of the number when informal systems fail, then you need to install a whole second management layer. And if you then have somebody who is 60 and says, hey, Jan, I worked my ass off for this company, I want to enjoy time with my kids, then you have a situation where you're not only looking for a new founder, e.g. a new CEO, but you're looking for all the roles he or she incorporated over 30 years of building that up. And then you are in the situation of replacing one person with 2 or 3 people, or sometimes even 4. And what I mean with business first and people second, which is a new mindset in my eyes of this era of hiring, you need to have a solid case, a hiring hypothesis, a business case. Why do I hire? Because if you don't do that, and this is the responsibility I feel I have as an HR person, I hire somebody, I go into this recruiting thing, I date somebody, we get together, and then I say, oh, sorry, I actually never checked if I can afford you, so goodbye. And this is why I think having the business perspective first, and then the perspective, is super, super important, because in my time in the startup space, I fired so many people without due cause, rather than, yes, guys, we hired you for Spain, but Spain doesn't work, so bye. And this doesn't feel good to me, to be honest.
Luisa, again, from your perspective, how does that sound? Because it's not just money you invested, it's
exactly. Well, I wouldn't hire someone which I can't afford, you know, when we're still looking, for example, for a backend developer, and the prices for backend of a good one, it's too much. We can't afford this as a startup right now. So we find like a loophole. We're using working students, you know, from very good university, which can support us, but it's more work on our side then. But we can afford working students, but we can't afford like a back-end engineer for 120,000 per year. And this is the price you still pay in Germany, even when you say, okay, remotely and everything. And so it's very, very tough right now, this kind of thing. But I wouldn't do this because it's a stretch, but as Jan said, it's a responsibility as a CEO or as a co-founder, because I wouldn't want to get hired and like 3 months later, sorry, I can't afford you anymore, bye-bye. And this person like let go other good jobs, jobs he just leave out for us. So that's not fair, and that's not what I want. That's not integrity, and one of our values are integrity, and this is not what I want to be known of. So yes.
It's a split, right, that you're being put in. I think, well, it's been said to that degree, but Arthur, when you take a look at a founding team, for instance, a founding team of an organization, we've either had where it's not necessarily that important, where it is important, and sort of the personal aspect of it. But the founding team, how important is that actually when investing in an organization? Keep it at that it's like a Series A, Series B startup.
So I would say if you, I look to companies on a maturity level. So basically, if you start from pre-seed all the way maybe to IPO, so it fits the screen, and then you have these different stages in between. Let's call it Series A, B, C, which is a little bit like coined by the VC industry. But you could also see, I think Jan might be sort of in the same level as a Series B or C company, but then profitable. I think you have to look a little bit more on a revenue level perspective. Then I would say in the early stages, like where Luisa is in, I very much care about the entrepreneur because that's all I have. But whereas if you are, let's say like me, between 1.5 and 5 million in ARR, then I still very much care about the entrepreneur because I mean there's still a long way to go. But obviously other things also become more and more important. So I would say the role of the entrepreneur gradually goes like this, and then there are like other factors which gradually increase over time. So I think about like how big is the market, how competitive is the product, how good are the unit economics, like is this indeed like really a scalable sales engine, et cetera, and so in general, where I then look for in entrepreneurs, it really varies. But what I personally really like, if someone is operating in a niche, understands that problem really well, who is also, I would say, a little bit more experienced in company building. There are like a zillion other factors I could mention, but if you want to highlight.
The main side. But you're mentioning very specifically the entrepreneur. So I'm assuming the founder, or not necessarily the CEO, but at least someone that is still highly involved within the startup, correct?
I think but that's maybe because I'm biased in the 1.5 to 5 million ARR industry in B2B SaaS. I would assume that it's still so entrepreneurial that the founder is still like highly involved. There's still so many product market fits that have to be identified, which is, I think, primarily an entrepreneurial role. Once I think what Jan mentioned, when you cross this 100 person, and I think you also mentioned this 10 million ARR, I still believe in founders and entrepreneurs. But I can definitely imagine that, for instance, I mean, just now look to Elon Musk. It's maybe a bit of a crazy example. He moves now at Twitter from being a CEO because he just simply doesn't like it. Of course, he can do it. But he moves to more like a CTO, CPO type of role, which is also, and then he brings in an external CEO. This is also something I could definitely see when the business has some skill.
But is it at scalability, at least at scale, an organization will have less value for the original founder or the original CEO potentially?
I think it's more about sort of the level of influence that you can have. So for instance, let's say you're serving like your first customers, the founder has to do it all themselves. He convinces all the main hires, whereas in 10 million ARR business, for instance, can also, whatever, say 25 and 30, there is more of an engine, so to speak. So which sort of runs by itself with a mid-management layer. So the influence of the founder in essence got smaller compared to before.
Ildiko, is that the same for you? Is where that, at least in earlier stage, depending on the scope of responsibility of an organization, the founder is so important?
Yeah, definitely. But I think here it's important that we are not looking for superstars, right? So yes, the founders is the most important, but I think what is very important that how they are working also together. So for our startups, we are always hiring more co-founders. And I think the idea is that you really try to have people with very different skill set, but still sharing, so to say, the same kind of mindset and value in terms of also where they want to bring the company, what is their long-term goal. So I think instead of just like focusing, one great hire, you really need to think about the entire team and how they would work together. And this is actually pretty much what we are doing also at Maximon, that we are putting together, so to say, the best possible match of co-founders in these companies as well. Maybe just one thing, if I may add a comment about Jan and business come first. Actually, I also pretty much agree with him that you should never hire people who you cannot afford, and you should plan it diligently what your business needs and not just hire someone for sake of hiring. But I think that there is a bit too much of a blame situation also at the moment going on. So it's always very, very difficult to do layoffs, and have been through that in the past as well. It's a very unfortunate situation as well. But now it's very easy to say that, oh, why did some company overhired like 2 years ago during COVID and now they're cutting forces? Because, you know, if you think about it, when the market is hot and you are not reacting and you are not hiring those people, then probably your competitor will do it, and then they get a bigger round as you do, and then your company may go down. So I think it's very difficult to, you know, to come up with the definition that how many people you know, and it should be a diligent task, but it's definitely not an easy task.
There is something to say for that, I suppose, as well. Is that you need to, well, we've all seen companies like a Gorillas, for instance, that hired incredibly fast and burned through a lot of money incredibly fast as well, for these reasons that they decided made sense. But I do understand that it happens. Luisa, you said something in the beginning, is that you, well, I think most of you agree, you don't hire someone that you cannot afford. Always?
Exactly.
But is that, suppose that this person can get you to X. No other person could potentially do that. You don't hire that person?
I don't believe in this because what I learned, I was in different industry, and actually it sounds tough, but everyone is replaceable from my point of view, and there's not this superstar out there. I'm sorry, I don't believe in that. So
You don't say sorry. It was just a question, but it's interesting to hear as well. Does everyone have that? Arthur, do you agree with that as well?
I think what I see right now, I mean, what I really value, I mean, just is whatever philosopher he uses the term creative destruction, and I think it was like meant in a little bit of a different format, but I like to use that term with in the context of experimentation. I mean, as a company, you experiment a lot, and then sometimes a hire works out, and sometimes it doesn't work out. You internationalize, and you just and you just don't know. So it's laying off people is a bit inevitable. I think about the discussion on hiring people which you cannot afford, I think this exactly comes to sort of the switch in paradigm that were underway. So in the last 12 to 14 years, with low interest rates, it was very cheap to attract capital. Like if you can, let's say you're a Series A company and you could raise 15 to 20 million and you give away 15% of equity. Maybe right now, you can sort of do the same. That costs you 45% of your company, or maybe even 50. And I think that just sort of changes the perspective on how you capitalize your business and on what hiring decisions, etc. You will make. But the more important point for me right now, and I think that's at least something I learned from this transition that we went through, is how do we build companies? There are companies that can go very fast, like remote.com during COVID. But I think also for many companies, they also don't need to raise these large amounts of money, and it's more about decent company building, and you're also not getting disrupted out just directly. And those companies can really build sensible business, and they don't have to hire everyone like crazy. And I think we all fell into this trap in the past few years that every company had to basically grow 200% a year and therefore burn a lot of money. But actually, that's nonsense.
And I mean, what the example you gave with Gorillas, that's kind of some people would describe it as a winner takes it all market. And if you look at the unit economics and the underlying hypothesis, I mean, it's for a lot of people, probably also personally, questionable if this product is needed and if this product can be sustained. And that is an example, I would say, was fueled by the market and by the interest rate, but I also don't see that this model would have been possible without cheap capital and without buying growth, basically sacrificing profitability, sometimes on a ratio 2-to-1. So you invest 2 million to make 1 million in revenue, something crazy like that. And also doing this heavily on the people side in this company. So you can always say in hindsight it was stupid, but you have a totally different world. In Germany, you have the German Mittelstand, where they act. In most cases, they fail to execute. So they have too much work for too little team, and then they hire. And they don't just hire because they want a number to increase. They hire a sales agent if they have too many leads.
Yeah.
They don't hire a sales agent to hope that by performance marketing and sales agents and just throwing money on that, they generate. So for me, coming from fitness, sometimes I think people taking steroids and now they have hangover, and yeah.
Is it bad then? Just because if you take a look at where VC funding has gone, like we had a peak, but we're right around where we topped out. What is it? 2020 again? So is it bad? What is happening or changing in terms of a new hiring spree? Maybe, sorry, Ildiko?
Yeah, I think it's always a matter of perspective. In my personal perspective, this is not something bad, because I really think that this brings a lot of new opportunities as well, and we will see more stable companies. I think there are so many exciting things going on. Also, we didn't talk about this during this talk, but all the technological changes, AI and anything. And I think there is a lot of companies who will profit from that, because they can build now maybe like stronger foundation. And I think we will see probably in the next 7, 8, 9 years, a lot of interesting companies coming now from this stage where we are. So actually, I'm rather optimistic in this regards.
And to quickly add to that, for me, the function of talent acquisition is the canary in the coal mine. 2 years ago, or 1.5 years ago, when I started here at Flex Capital, I was advertising a role here in my team. I mean, every hiring manager is narcissistic and thinks his or her role is the best. So I was thinking that. But joke aside, I couldn't find a person. I wrote 90 to 100 emails, and it was really hard to find a person. And right now, I can find for the same price tag numerous persons. I have numerous persons asking me, "Hey, do you have a job?" The same goes for freelance recruiters or people like you guys from KeySearch. Everyone was booked out, and right now this went down a lot. So to flip that around for a company, you have a better, deeper talent pool for cheaper cost.
Is it also in terms of compensation? Because we saw this during the peak, is that compensations skyrocketed. Has this changed now, in your perspective? Arthur, perhaps?
Anecdotally, I would agree with Jan. I haven't seen it overall in the market. I also think that the B2B SaaS market is quite small, like anyway. So it's also a little bit like, what type of person are you hiring for? Like if you're hiring for the so-called like unicorn person, he or she might still be super expensive. But I do definitely think there are more options nowadays. So I would also particularly expect, like in the seed environment, that there are lots of people who got laid off, that they are now starting new companies. So I think overall it's not a bad thing on an ecosystem level. And like as an entrepreneur, you might basically be really pissed off with everything what happened, but on the ecosystem level, there is like a different answer.
I think it's a fair judgment as well. But maybe to not necessarily create a conclusion, but does any of you have specific advice to the startup founder, like Luisa? What would you advise now?
Well, it's right now it's tough out there, of course. And what I would advise, not only count on, for example, external money, or VC money or PE money, but look for, in Germany, there are good grants from the state available. You can apply, especially when you do something new. And so we are applying for research funds because we are doing something new. This could be something to not only be so dependent on VC or PE money, and be transparent to your people you already have on board. And you have to really you have really taken more care about costs compared to, I would say,
first,
like,
including people.
Yes. Sorry for my background.
Jan, was that your conclusion, or?
I mean, I think that overall, look for the two big numbers, that being your top line and your bottom line. And also, if you work in HR or with people, look for revenue by employee. I mean, some companies don't even have this simple number, and how does it scale? And in the end, try to be or aim for profitability, because it gives you freedom. It gives you freedom to go to a PE investor and get a really good deal. It gives you freedom to say no to your VC investors, and it gives you freedom to run the company and create a good impact by being capital efficient.
And then taking a look one step further, we're saying being capital efficient, taking a look at what the cost is or what the revenue is per employee. An easy solution would be to cut costs on the top and hire cheaper labor, like Luisa mentioned as well. Is that something you'd advise?
I mean, it's always a bit depending of the company and which structure the company is as well, right? But I think what probably it's a good idea to think about it. Most of the a lot of startups in the recent years had crazy high salaries, right? Some of them like paid much more than even like established corporate companies. Of course, we have a very tough candidate market, and I think it's still a candidate market, but it's a bit less than it was like 1.5 or 2 years ago. But I think, especially if you are talking also about now founders, now I think it's the time that you have like real entrepreneurs who are also, so to say, willing to do some certain of risk, because being an entrepreneur and founding your company is risky. Yeah, that's a risky thing. And I think now we had in the last couple of years a lot of people who just kind of tried it because I get anyway a great salary, I don't need to do too much sacrifice. And I think in that regards, I think it makes sense, that maybe this mindset is shifting as well, and incentivizing the founders with real equity and so on, and not just like, extremely high salaries, and then you get some very little percentage of a company. I think that's not working. Yeah.
Okay. Thanks. Arthur, anything to add?
Yeah, so are a couple of suggestions that I have for the audience. I think on the hiring perspective, one is maybe potentially also look to like rural areas. Let's say if you're like in the Netherlands, you can hire from Amsterdam, but that's probably also the expensive area. So like if you're in Germany, there are definitely somewhere or like in the middle of nowhere, like or some pretty large cities where there are not a lot of so much competition for talent. So that's but also where the people actually have a different mindset. Forgive me if I'm saying not that spoiled. So that is one. Second, for the people that you like, everyone is smiling and recognizing it, I hope. The other thing is for the people that you hire. I mean, you had tourist investors. We all know it. The hedge funds that came in and thought, let's try this VC game. I also think you have tourist operators. And with that, I meant the people who in the last 2-3 years claim on their CV that they were in company XYZ, which was so-called a unicorn that's raised lots of money in a short amount of time, and they claim their successes on themselves. I would basically maybe also try to look for different type of people we have the grit, who also know how to deal with smaller amounts of capital. So I think that is it's a different mentality type of person. So I think they're potentially also more affordable. So that's definitely something. And the third thing that I would really recommend is take a different perspective on company building. I think somehow we got this view that we have to list all on the NASDAQ because then you're a success, or that you can only become quote unquote rich or become very impactful if you raise a lot of money from VCs. I would say if you like just a fund like us, we look for niche players who don't grow that fast. So just knowing the right investors to pick, and then maybe just raise one round, just grow steadily in a defensible niche to whatever 10 million in ARR. Then from there are like a zillion options to still raise some money, get a large company. You can do management buyout. You can maybe collaborate with players like Jan. So there are way more routes to become like a large company. And even the nice thing, if you get profitable at 10 million ARR or something, let's say you have then 10 million, 2 million in profit every year. That's the equivalent almost of 2 million in funding every year, which you can use to basically grow your business. So I think just get a different perspective on company building is really crucial in order to succeed in the long term.
I think what you were saying as well is we've kind of moved away from the explosive growth by all means, hire people with amazing CVs from amazing company backgrounds, and that will guarantee success. And I think that investors also, because we saw this with our clients, investors also looked at this. Or was this a perception that investors took a look at the management team? If they came from, I don't know, if it's a food delivery company, that they had a background in Delivery Hero, for instance. Was that actually the case? Or not that relevant?
I mean, when capital is cheap, you can hire more expensive people. So the whole incentive system was just entirely different than what it is today. I think that's just makes
you would care 2 years ago, not as much now.
I would take different factors into account and put a different weight on it, indeed.
Okay.
Yeah.
I mean, for at least for the PE space, if I propose a candidate who worked in a YOLO environment, then I'm always challenged on my candidate pick, like, hey, Jan, is this person, can this person get real? Can this person get back to us? Or is this person VC tainted? Mm-hmm. Because if you build a sales team from scratch to 100 people, and you had 1 million for that, I mean, you could also have just had 1 million to each person and everyone would be happy. I mean, just saying, it's to put things into perspective. If you have an unlimited or nearly unlimited supply of money, it's not hard to do things.
That makes it incredibly hard to hire then, Nara, because most of the people that have built teams have done so in companies that were funded quite well. So how do you sift through that? Any advice?
I mean, I would always drill down what did people actually do, and also how do they reflect about it. If you have a person who built a sales team and has X Uber, X blah blah blah, X this in his CV, and then tells you, I have the playbook, I will do A, B, C, I will get Salesforce, and then I get the sales consultant, and then you already see, okay, this might work in a hypergrowth environment, but this will not work in a smaller company where you have a team of established people, maybe they are 50 years old. Then beer pong will not cut it.
It's a massive difference. Well, it's often taking a look at what problems have people owned, but actually, did they own them? I think it's quite right, at least how we view it as well. Ildiko, you wanted to add as well?
Yeah, I think track record, it's of course can give you a certain idea about a person, but I think you can be very fast, very biased about it. So I think it's extremely important that you have a very well structured hiring process. So I am all for structured hiring process, because otherwise you can end up in a situation that, we worked in this type of company coming from this kind of university, and then either you are missing on talents or you just bias and you don't have the right person. So we always emphasize on trying to structure the recruiting process a way that you can really find that out. And this involves, in our case, like we do structured interviewing, but also what is for me very important as well, that we are implying, for example, case studies when the founders are thinking about how would they build up the companies, what would be their ideas. We are inviting them for 1-2 days to spend with us. We are doing workshops together, because, you know, in the end, we want to figure out as well, what are your vision? You can be a great talent, but it's maybe just not what we need in this stage of the company. And I think working together, working on these problems, and not just having hypothetical questions, but really trying to work together, I think this is kind of the way how you can a bit decrease the bias. I think you can never get rid of completely of it, because we are human and we always have this part, but at least I think we should try to structure it a way that we are decreasing that.
Because both, at least all three of you, have something quite similar. For you, it's something quite similar, and you're focusing on both the track record and, on the beginning in the conversation, the personality. But if you don't have the luxury, like you, Ildiko, to have people on site for 2 days, that's not often that happens. Even with a case, doing a case in the last 2 years was a bit of a drag to ask candidates to do that as well. How do you best test someone's personality traits in an interview process? Any advice there?
Structured interview questions, I would say. So, I mean, what we do is a bit extreme, right? Because we are hiring for founders. So there you need to, like, you cannot make shortcuts even when they have 20 other offers. It doesn't matter. You cannot make shortcuts with founders. But of course, you cannot apply for every single job the same kind of strategy. And I think you should keep in mind that what do you really need? So having structured elements in your process, and then trying to develop questions for those as well. And then instead of just like, you know, decide based on sympathy and so on, you have really the different attributes which you are testing in the process. And that you can do in online interviews as well, if it's not like a management kind of position, in my opinion.
Okay, thanks. Anyone else anything to add?
So if I look like in sales, if I want to predict revenue, I'm really looking for leading indicators. For instance, like how many opportunities do I generate, how many people are negotiating, and that will in the end, I hope, lead to new revenue. I think in the hiring context, it's also very important before you start hiring a person and you go through the entire process. I mean, from my perspective and what I've seen in my ventures, you still make quite some mistakes, and you can blame the person, but most of the time you have to blame yourself. The important thing though is to, before the person starts on day one, is have a few very good leading indicators of what does success look like after a week, after a day, after a month, after 6 months, and then also be able to make the decision quick if something is not working out. Because I think there are two ends of the spectrum here. It's also not great for the candidate if he has to like waste another 6 months in your company then to figure out that he is not a fit. So thinking in these leading indicators, that's, I feel, what is not very common in companies, but it's really crucial to make the decision faster.
I can fully underline that. I mean, with our internal TA team, we have something called hiring request sheet, and there we have what does success look after 3 months, 6 months, 12 months, and 24 months. And I get always the feedback of hiring managers, I don't know, or it's so cumbersome and blah, blah, blah. But I mean, you already see some job descriptions out there where they have a definition of done or definition of success in the to-do area. So this would be, for me, the gold standard. But it's, you invest more time in planning the role, and a lot of people are unwilling to do that.
Yeah, if you plan for success, generally. But that's something else. There's one more thing that I'd like to finish on. Each and every one of you, and Luisa is one, obviously, focused on the founder of the organization. Then, considering that in the end, creating the team around that person is so important, is there a red line across founders that makes them successful? So surrounding them with people that make them successful, potentially.
Yeah, well, for me, was it when I met my co-founder, we are different personality. I'm more the extrovert, she's more introvert, and we have totally complementary skills. but we have the same values, which is really nice. She is the same age as me. She has children, and so it's kind of, we can resonate on there. So, and she's female. I don't know. This helps as well a lot, and we understand each other. And this is actually what before that I didn't have this onto my this complementary skills, which is very, for me, it's like the breaking point, because I can do what she can do, and I can't do what she can do. So that's actually, and we trust each other. So that's why I think that's for me the most important thing.
Complementary and trust.
Exactly.
Ildiko, I think all of you work with a lot of founders.
Yeah, I mean, I fully agree with Luisa, and this is also my opinion. I think what is, of course, also important, that once the organization grows, it's very important that you don't stuck just with the founders, and that you can really build up a middle management. And there you need probably also founders who can also attract the top talents as well. And sometimes, it's also important that the founders is realizing that maybe I'm not anymore the great fit for the company, especially if the company is growing. I mean, right now I'm working with a lot of founders who are doing this seed stage, so from the 0 till 50 or 0 to 100. Mm-hmm. They may be not the right fit once the company is going for a series, series C, or they want to, do also something else. They will not necessarily like even the job. You don't want to be, if you are the personality to build stuff and build companies, you not necessarily want to become then the CEO of 500 people, right? So I think it's always something you need to keep in mind, that organizations are changing, and that's I think also a key factor here.
Thanks. Arthur?
I've seen so many founders. All of them have something special, but it's very hard for me to put it in a box. At the end of the day, it's about being prepared for the specific task which is at hand. And some people are very good at people. Some people are very good in product. Some people are very good in something else. I mean, just if I resonate from my own founder experience, I definitely agree with Luisa that with this sharing values, that you also, how are you aligned on an emotional level, that is quite important, because you will go through a lot of hardship, and that is from an investor perspective very hard to check. But from like a former founder, I can definitely say that is one of the most important things to succeed.
Cool. Thanks. Jan, to finalize?
Sure. I mean, we have two setups. One setup is the founder especially says, I want to sell and I want to leave. There we really try to deconstruct the person, and the longer he or she stayed at the company, the more people we need to add to fill that hole. So as I said, it could be that you have 2 or 3 people filling a place of one person. And if we have founders who want to stay, then we normally try to place finance persons, just a CFO, if not already existent, next to the founder, and also look into other functions and try to establish a second management layer here. So this is the playbook that we follow in most cases. And from a skill and complementary perspective, this introvert, extrovert, happy couple you see at a lot of 2 or 3 founder companies. So that's not uncommon, at least anecdotally from my side.
That happens a lot. Well, the band is still together. The longer it takes, the more often they break up, obviously. But it's from a founding perspective, it's interesting to that there isn't a one-stop shop or one thing that everyone can do. You all seem to be quite adamant. It depends on the situation, depends on the challenge that you're in. I think that same goes for the hiring. Despite us all agreeing on there is a change that has happened, it might not be for the worst. That it actually, from an ecosystem bigger perspective, is that the things that are happening are actually positive. For some people, it's just not fun to be in the midst of it, depending on the situation that you have. Lisa, I want to thank you all for taking the time and giving the input as well. Luisa, enjoy your holiday, and everyone else.
Thank you. Thank you.
Yeah.
Thank you for organizing me.
Thank you for your time, and hopefully speak again in the future.
Thank you.
Thanks, everyone. Bye-bye.
Bye.
Thanks. Bye-bye.